You have to master how to trade, and this might be the most important video that you must watch as a trader. Throughout this course, you'll be able to learn everything you need to know about Japanese candlesticks, everything from A to Z. This course is suitable for everybody, whether it be a beginner who knows nothing about trading, all the way to the experienced traders who want to take the trading to the next level. You are all welcome here, and you will all learn something. This video is going to get split into two parts. Part 1, where I teach you how to read and understand candlesticks. These are basic foundations that you must get right. Then in part 2, once you've understood how to read and understand these candles, I will show you how to use them in the live markets, because you must learn how to properly trade these to be effective in your trading plan. Enough talking, let's get into part 1. Right, so now we're in the video, we'll talk about the candlesticks. We'll understand how to read them and the meaning behind them. So first of all, there's two types of candlesticks, a bullish candlestick and a bearish candlestick. And these signify if price goes up or price goes down. Just, that's the simples. And then if we want to get more information from it, we can see that this is the opening price for a bearish candle, and then this is the closing price. The price of a bearish candle will always close below, compared to a green candlestick where price will open at this level here and close here, meaning that price will always close above. The meaning behind the wicks is also very simple. It shows the range within that candlestick. So say that this is a 1 hour candlestick, this is the 1 hour high, and then this is the 1 hour low, which price would probably look like this. So we would have started at this range, maybe gone up a bit, come down to this bottom level, and then come to this top level up here, and then ended off here, which you see that this is what the candlestick would look like. It's also important to understand that all three components of a candlestick is important. The three components are the wicks, the body, and the colour. As you can see, there's normally red and green. As we know that without one, the information is useless. So we can see here that price opened here and it came down to here, but we don't know the range. We can't see the wicks. We don't know how high it's gone, how low it's gone. And then this is the same without any colour. So we see here, oh, it's a grey candlestick. Price may have started here and come up to here, meaning it's a bullish candle, or price might have started up here and come down to here, meaning it's a bearish candle. We do not know. And then finally, this is the stupidest one, without the body, we don't know where price started or where price ended, but we know that is a bullish candle. So for all we know, it could have started down here and come all the way up here, or it could have started here and come down and then up, or even could have started up here and then down and then up. We do not know. And that's why it's important for all three of the components to be together. That's what gives us a candlestick, and why it's important, and how much information it gives us just from one thing. Next, the most important thing is learning about buying and selling pressure. With this, you will not need to know any candlestick patterns, because it says it all just from this. So as we can see two candlesticks. They both look the exact same, they're just different colours. It's because they both mean the same thing. And what it is, all of this top wick here, this is all the selling pressure, because price has started down here, come all the way to this high, and then finished off coming down. All of this down leg is the selling pressure. And then it same goes for this one, where price started here, came all the way to this high, and all the way down to this bottom wick, and then closed here. This whole leg is the selling pressure. This needs to be reversed, of course, because if there's selling pressure, as we know, there'll always be buying pressure, because market means the same thing reversed. And as we can see here, oh, I've done a bit of drawing already, that this here, all this bottom bit is the buying pressure. It can be green, yellow, white, blue, I don't care. It can be no matter what colour, but we know from this whole bottom wick that it is selling pressure. Buying pressure, sorry. Because we know price started here, probably made this high, came all the way down to this low, and then closed up here. This whole leg is buying pressure. And of course it's the same. As we can see here, price started Price started at this top part here, came all the way down to this lowest point in price, and then came up and then closed, because this whole leg was buying pressure. Right, so now as an example, we would call this a resistance level, and we see that price has made higher highs until it's hit this level. And now what do we expect to happen after we've seen a lot of selling pressure coming from these candle wicks here? So we've got a lot of selling pressure on that one, and then a lot of selling pressure on this one too. Of course, when we see selling pressure, what do we expect? I know, sells. There we go. Beautiful. Just as simple and easy as that. This can also be reversed. So say that this is a downtrending market and it hits a key support area. Let's just make it blue. Once it hits this key support area and we see a lot of buying pressure, we would expect to see a reversal happen where we'll start getting greens, and then this will continuously happen until price comes in and then hits this one. But at the top here we'll see a lot of selling pressure, and then we'll come back down here and then we'll see a lot of buying pressure until it breaks out of this support or resistance zone to leave the market. Leave this zone. Just as simple as that. Right, so now let's take it to the next level. So as we can see here, we'll be talking about strong and weak momentum candlesticks. This is everything you'll need to know that will tell you the story behind the market. So as we can see two candlesticks here, both having the same range from the lower wick to the higher wick, both being the same price range. But what's the difference between the two? As we can see here, this price has started at this low and then come all the way up to this high to close, compared to this candle where it's opened at this low and then closed at this price. The thing that we can see is the momentum that price has taken it. Even though price has been at the same range with these highs and then these lows, which made price probably do something like this, whereas price doing something like this, we can see that this one's definitely got more momentum because it's closed a lot higher. Remember this, the bigger the body, the more momentum within the candle. Now there's three main types of these candlesticks. There's an indecisive candlestick, which is like the one I've just shown you, and then there's a bullish decision candlestick, and then a strong bullish decision candlestick. All these can be reversed to bearish, so that can be a bearish decision and that can be a strong bearish decision. And the difference between them all, the indecisive candlestick is bulls and bears battling to take control, but nobody's sure where they want price to head. And then with a bullish decision, bulls have the majority of control. Bulls know where they want price to go. And then the strong decision candlestick is there is no battle between the bulls and the bears. Bulls have 100% control. And this also can be reversed. So bears can have 100% control, and then bears can have majority of control, and then they can still both be indecisive about it. Now that's all good stuff, but how would we even use them in a chart? So here we go, I've mocked up an example of a support and resistance area, and we can see prices hit this level and come down to this level and come back up to this level. But you have to look at the candlesticks because all the candlesticks tell a story. As we can see here, the bulls are making a strong high and then they slowly come a bit more indecisive until they reach the top here where it's a full indecision candlestick. Make sure to pay attention to the bodies of them, how they get smaller and smaller as you go up to the resistance level. Now once we hit the resistance level, we get this doji candlestick form here. This will show the start of a reversal back down to the support level, and then as we can see, we see bears are mainly in control, and then bears are 100% in control, and then bears are starting to lose a bit of control, a bit more here. But then here we see another doji candlestick, and if we look at this wick here, this is showing a lot of selling pressure, and then this doji candlestick here will show another bottom point of the market at this support area before bulls and bears battle it again to make this decision candlestick. But it's a bit different because even though bulls are in control, bears are showing a bit of kickback with this wick. And then we see bulls have more control here, and then even more control, and then they start to slow down again when they hit this level. Now that's the basics, and if you put this together with the previous part, you'll be able to master reading the markets. Now you've learned how to read and understand candlesticks, we'll have to go into the next part of the video to use them in the live markets, because it's all good knowing the theory, but you'll never learn anything without going into the live markets and trying it for yourself. So I'll show you how I do it in the live markets, and then you can try it next. Right, so now we're in the markets. As we can see, I've marked out a key resistance and support area. And some key things to know is that the first thing is always use the higher time frames to mark out levels like this, because on the lower time frames there's a lot of noise in the market, so we can't see and listen to the market clearly. But what we'd do, so we're on the 4 hour time frame as you can see up here, we'll drop down to the 15-minute time frame because we can see prices coming down to a lower level. So we'll just play it one more bar. So as we can see, prices come into the support area, and then we'll be looking for them key candlesticks which we were just talking about. So already we can see price here, it's made this huge bearish candlestick, and then it's gotten a bit weaker with the smaller body, and then a bit weaker again with an even smaller body, for them to be a huge body which has not really got any wicks. And then the first major thing that we see is a bullish candle with a huge wick underneath it, this wick here. And the first major thing that we can see is this candle here, this bullish candle with this wick on the bottom. It's a fair big wick in comparison to others around it, and that shows our first sign of a reversal. And then we see some indecision candlesticks here, and then to following on with a bit more indecision coming around. Let's just play the chart a bit more. Then here, this is our major thing. So of course, whenever you want to enter into a trade, you want to have at least 3 confluences. My 3 confluence would be, there's a lot of buying pressure with this candlestick here, and then we see an evening star pattern here. And if we wanted to get fancy, we can use the EMA to see that here's a crossover. The crossover means that price has shifted from a sell, and it's most likely going to become a buy. So what we'd do, we'd always set our entry at a level which we feel comfortable at, which would be here for me. We'll have a 30 pip stop loss, and then our take profit would all be at the next key level. Now let's see this play out. And boom, there you have it. This is the first trade that we've placed together, and this is a risk to reward ratio of 1 to 4.2. We'll just call it 1 to 4 to make it nice and simple. And the great thing about trading these candlesticks in a support and resistance zone is that you can do it back to back. So now once we've won this trade, right, so now we'll come up to this resistance area, and as you can see, prices come into this resistance area, and we'll be waiting for something good to happen. Right, so now I've played the chart along a bit more, and we can see a lot of indecision candlesticks here, and then we can start seeing where price is making a high, and then a low, and then a higher high, and then a lower high, and now it looks like a lower low. And then we see this huge bearish candlestick. We would want to enter after we see 3 confirmations. So the first confirmation is these indecision candlesticks, and then after we see a bearish momentum coming down, and then the next one would be this large engulfing candlestick with a huge body, and then this would be the next, these two would be the next one with a lot of selling pressure with the end of these wicks. So we would place our trade here, setting our stop loss above with a 42 pip stop loss, and then taking our trade all the way down to the next key level. This is only a 1 to 2 risk to reward, or 1 to 3 risk to reward. But as we can see, this trade played out perfectly. Now we can do this continuously, bouncing up and down and up and down. and it gives us a really good feel for the market. Of course, always backtest these ideas because you need to know how to trade them, and so that you feel comfortable, because the more you feel comfortable, the better stop losses you can take, tighter stop losses, the higher lot size you can use. Right, so as we can see, prices come down to the support level again, and with strong bearish momentum coming down with this candlestick here, and it gets weaker and weaker as you come down to get these two indecisions at the bottom, for them to be a huge bullish candlestick upwards, and then to be a bit more indecision, and then another huge bullish. These are both strong bullish candles because there's not a huge wick on them. So already I see one confirmation, two confirmation, and then three confirmations. So I would already be looking at placing a trade. So say that I entered here, setting my stop loss below, 25 pip stop loss, and then setting my take profit at the next key level, which would be the resistance level, which is up here. Let's see how that trade plans out with a risk to reward ratio of 1:5. Right, so there we have it. We see the third trade panning out perfectly, just about hitting our take profit before, I'm guessing, a reversal, as we can see, coming back down to the support area again. Right, so as you can see, this played out perfectly. Now what I want you to do is go onto your trading view or whatever charting website you use, and you backtest this until you feel comfortable to use it in your trading plan. Thank you for watching, and I'll see you in the next video. Skabash.